Good evening, everyone, and thank you very much for joining us tonight. My name is Patrick Nelson. I'm joined by Ivan Truelove for tonight's session. And we've got a whole bunch of stuff we're going to go through, but predominantly tonight's session is about focusing on a trading system that encompasses how to pick direction, which strategy to apply, and then how to manage the risk. And we'll go through that, and this is just one example of a trading system that we use, and we run this session as a way to focus on, I guess, what's really important to us, and that is if you're going to trade and you want to be successful as a trader, you need to apply an approach which will lead to that. And trading systems is something that, regardless of what topic you get us to talk about, you'll hear us bring into the conversation, because it's the bedrock of what makes someone successful as a trader.
And not just us. Like this is all successful traders
yes,
talk about this.
Correct.
You know,
correct.
This is
yeah, and a lot of the time people fixate on picking direction or their technology or whatever their whiz-bang edge or strategy is going to be. The reality is that trading is like running a business. There are ingredients that make a business successful. There's an approach that makes a business successful, and those things need to be applied. So that's what we focus on. And that, as far as who we are and what we do and how we approach things, my name is Patrick Nelson. I'm the MD and founder of Reach Markets. My background is I've run one of the busiest options desks in Australia for probably close to 15 years. I sold that business and started Reach Markets about 18 months ago. And in Reach Markets, as well as working with Ivan and on the trading part of the business, I also lead the company on the capital raising, portfolio management, international investments, and the like. And
absolutely smashing it.
Yeah, thank you. And business is good, and we've grown a lot. And Ivan and I run the trading business together. Ivan's is a long-term trader. He started trading when he was quite young, 14 years old, full-time trader when he was 19 years old. He doesn't talk too much about his trading past, but he made a lot of money as a young person trading, and then he went in to the market and became a prop trader, futures and FX broker. But then really importantly for the industry, he started a business called TradeFloor, and TradeFloor very quickly became used by the majority of brokers in Australia for their risk management for options trading. And I met Ivan some time ago. I'm not even... Can't hear any sound from Ivan. Okay. I'll just do a sound check. Can anyone hear us? If not,
I guess we're starting again.
We're starting again. Yeah, if someone could type in yes.
Yes, we can.
Okay, Gordon, Merrill.
Thanks,
okay,
Tim. Yeah,
fantastic.
Thanks. Yeah. just completely destroy your train of thought.
Yeah, that's okay.
I feel like Tim just doesn't like me.
Yeah. Anyway, Tim's just popped his head in. Tim
just
runs...
destroying your compliments.
Yeah.
Give him coming.
So I'll keep going with Ivan, but Ivan started that side of the business, and then he started an online trading, options trading, bit of technology and a broking service, which I bought into, and we turned it into Reach Trading. And Implied Volatility is the platform and the technology platform that Ivan and his team have built. And so we've worked together.
Conversations from about 3 years before that, but
it's been a long time in the making. And then about 18 months ago, we did something about it and we started it. And if you look at the technology, that's the technology that Ivan and the team have built, and I've had some feedback on, I will say, and really the idea behind what we've put together is not about it being a technology solution to everything. Technology is incredibly important if you're going to trade and you're going to trade successfully. There's no doubt about it, but it's not the only piece of the puzzle. And I guess when we've looked at it, we've looked at the market and we've gone, I came from a background where I had an online solution, but the technology was poor, but we couldn't find a good technology partner, and we had full service, so people would pay expensive fees, or they would use bad technology. And I guess the way we've approached it is to say, how do you deliver a service that if someone wants to trade successfully, they get the bits they need at the point in time they need it? And sometimes it's education. We do a lot of education. We've got a lot of education. Sometimes it's getting trade ideas from us through, let me turn my phone on silent, sorry about that. Sometimes it's getting us to do quant tested trade ideas. It's trading online at the cheapest rates, or being able to put spread trade on, or be able to value position, or be able to back test your trading ideas. And sometimes it's pick up the phone and speak to an experienced advisor who can help you through what you're working on or who can come to you with trade ideas, right? And so we've kind of put that together. It's taken us a while to do it.
Just recently we completed the circle.
We sort of completed the circle, but it's by no means finished in what we're attempting to do. But we've got, we go back to running one of the busiest desks in Australia. We've got the best technology, but our approach is we want you to be able to trade at the lowest prices possible. We want to make it as easy as possible, give you the best tech to do it, and equally, excuse me, we also give you the opportunity to speak to some of the best options advisors in Australia when you've got a question.
Really trade their own accounts.
Yeah, who are traders, and they're actually, we call them option advisors. They don't come from the broking market traditionally. I mean, they fulfill a function of a traditional.
At 2:30, they'll actually be in the office.
They'll be in the office, that's right. But they're options guys, and we do lots of other things in our business. But advising people to buy and sell shares is not one of them. If you want to open an account with us, it's specifically because you want to trade options. That is it. Don't want to trade options? Don't open an account. And we're very, very clear about that. I mean, we'll give you information. We get exposure to deals. We do lots of different things. But in terms of transactional, not only in the options space. So there's a little bit about our background. Now, in tonight's presentation, I'll click through this. We're going to cover these things, but I think I've mentioned that already. Any advice is general only, doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. Now, and I sort of alluded to some of these things, but for us, to help someone trade successful, it's about giving you the best tech. We invest a lot of money into and time and energy and effort into analysing things to try and work out where you can ascertain an edge from. So we've done a lot of research, and we publish a lot of this research. Next year we should have four PhD students working for us
from a leading university in partnership with us, which is awesome.
Yeah, which we'll be able to announce the university, but it's one of the big four, and
as soon as they sign the letter.
Yeah, as soon as they sign the letter. But then we next year we'll be doing a lot of work on this more. We've got the tech and so forth, but now it's probably just giving you more ideas, more research.
Just giving back, ultimately.
Yeah, absolutely.
And also, you've put it 1, 2, 3 in terms of importance of order, in terms of how we've built it. The thing that we started on 3 years ago was how little education there was in the market. So it's really almost reverse, where sort of, the education comes first, and then,
Absolutely. And on the education side of it, we actually did a course when we first started the business together in Ivanhoe, which was an interesting process to go, because it wasn't like we weren't busy enough already. And we did a 3 or 4 month program. We did 6 days face-to-face. It was good for us to do because it made us write a manual and put our thoughts down on paper. But then we thought, stop this. I'm never doing this again. And we just recorded it all. And now it's, we just want to give that away for free. And so that education and support's also important. So sometimes you might be, if you're trading online and you're looking at something and you're going, okay, like Tim tomorrow is running a session on how to use the platform, and there'll be a Q&A session. And then at midday we're doing a trade ideas, and we'll look at the market, and we'll look for trade ideas, and we'll discuss some of our trading scans and so forth that are in the market, and people might have questions about trades are in and all that kind of stuff. It's to provide an experience so that you don't actually, well, you might want to pick up the phone and speak to an advisor and put the trade on through the advisor and pay for that service, or you might equally want to be able to just do that online. We don't care. We just want to create a scenario where you're covered. It gives you what you need when you need it, and it's something that's really important to us. Sort of this is that it's not, we're not trying to mirror anything old model. It's just and a lot of it comes from feedback that when we're talking to our clients and traders.
Just speaking of which, the platform thing tomorrow is based on the fact that one guy sent us an email the other day saying that he'd like a little bit more education on the platform. Same for this webinar. If you guys have any questions, regardless of what it is related to trading, shoot them through. Whatever beginner to advanced, would be happily answering them at the end of the session
Or
during.
We better get on with
We should.
The suggestion might be, can you just get on with it? Now, look, this is...
Just because we like the topic, okay.
Yeah. Look, one of the things that's unique about our trading platform is that if you want to do a trade, an options trade, and it's more than one leg, we're the only place that can help you, right? So if you want to do a four-legged iron condor, you can put that trade on through our platform. It's very simple. And so you can reduce the cost of borrow. It allows you to put on lots of different strategies, whatever you like, and really opens up what you can do. It allows you to be able to predict what your option's going to be worth when the share price moves, when time decays, when volatility increases. It's very easy to change those variables. It allows you to scan the market quickly to identify trading opportunities. So if you're a busy person, you just want to look at the market and say which ones line up, you can do that. And it gives you the ability to backtest any idea or hypothesis you've got. But that's the platform. But equally, if you want to pick up the phone and speak to an advisor and say, are you seeing anything, or what do you think about this trade, or whatever, that we've got all of that in the mix as well. Now, I'm going to quickly talk about options. I appreciate the majority of people in the session tonight will know what an option is. And for those that don't and might be new to it, I'm going to go through it very, very quickly. But the idea is not that you will understand what options are and everything about them. It's more that you can understand the principles of what we're talking about. If it's something you want more education on, just type in education and we'll give you access to all the education. But really, very simply, the 2-minute version on options, there are two types, calls and puts. A call option increases in value when a share price rises or index price rises, and a put option increases when the share price falls or the index price falls, right? So a call appreciates when it goes up, a put appreciates when it goes down. Now, they also give us the ability to get exposure to leverage. So instead of going and buying a $30 shares, I might be able to spend $1.50 or $3 and get exposure to that $30 share, right? So I'm getting access to leverage. So I don't have to risk as much money to get exposure to an investment opportunity, right? The other thing I can do with options is I can use them together, right, and create combination trades. Now, why is that important? Well, because I can then reflect exactly what my view is of the market. And instead of it just being, it's going to go up, I might think, well, it's going to go up a bit, but I really don't think it's going to go down, right? So that might be my view. I can use an option strategy that allows me to actually execute that view. The other thing I can do is I can start coming up with strategies that will give me a higher percentage chance of being successful, like an iron condor, for example, which, we can see, well, there's statistically, the odds of it going up 50-50, up or down are 50-50, but if it's finishing within this range is 68%, actually statistically it's probably more like 72%, 73%, that it will fall within that range. So I can increase the odds of my trade being successful. So anyway, that's your quick tutorial on options. We'll come back to options a little bit later with an example of an option strategy. So what is technical analysis, right? Now, I'm just going to go through some technical analysis based on our simplest trading strategy. So it's not a tutorial on all the things you can do with technical analysis. It's just the simplest method that we use to identify one type of opportunity, right? It's a really good one, but it's just one in the mix, right? So first thing I mention is we like to use candles. So what are they telling you? This information, the highest price, the lowest price of the day, the opening or closing of the opening or closing, and then, they'll be red or green. Green if the close is higher than the open or the current price is higher than the open, and red if the current or the closed price is lower than the open, right? And then you can see the trading activity for that day.
And more importantly, the momentum.
Yeah. Yeah.
So if you see a full-bodied candle, that means there's been some seriously strong buying momentum, and vice versa. And you get situations where, US may give us a really weak lead, and then suddenly, we open up really low, and we may have lost on the day. So it might overall be a kind of a negative day, but the candle is gives a strong buy signal. So
absolutely. And if I look at those candles on a chart, and on this chart we're looking at here is looking at individual days, which is how we use it in this particular strategy. I can look at that and I can sort of, you know, you can draw lines on your chart, but you can say, oh, well, there's a, you know, a bit of some selling coming in at this kind of level, some support at this level. We've seen a major breakout here. I might say, you know, it was trending, whatever. You know, you can draw lines on it. You can start to.
I bet they said they're not paying dividends anymore. We're taking it all back. Here's a reverse dividend. You pay us.
But it allows you to then start to, candles then allow you to plot the information, and you can start looking at for extra stuff. So primarily the starting point for a lot of people is support and resistance. And support and resistance, well, we use it in different ways, but
You're losing your voice.
I'm losing my voice.
I remember watching a YouTube concert on YouTube once in France, and he lost his voice in the second song, but he came back.
He came back.
It came back. So
I've got a drink here. I'll see that.
Buyers and sellers, come on.
Let's see if that works.
You can do it.
So what we're looking at here is where the buyers and sellers are coming into the market, or where, you know, I guess if we draw a line across those buyers and those sellers in this instance, we can see an uptrend. We can see resistance trending up as well. We can obviously, we can see a channel, right? Now, the thing to make, the point to make about technical analysis is that people will be on session tomorrow at midday, and Ivan and I put Wednesdays aside every week to work on the trading side of the business together. So when we'll sit in the room and we'll look at the trades, we'll have an opinion about certain things, only a few things, and then people will ask us questions, right? And the reality is that most of the time we go, I don't know, right? Because
and don't care.
And well, and correct, and don't care. And but the thing is, right, that as a trader, as a technical analyst, you're a sifter, not an alchemist. You look at things, and when they all line up, then there's gold in the pan, and when they don't, there's nothing there. So I might have a vague view that CBA is undervalued or overvalued, but I'm not going to put any money on it. So if you ask me my opinion, I can give you a vague view, but I hate having that conversation because it's meaningless, right? Just chat, right? But if someone's asking me for opinion...
Also, you know, we are a bit weird in the sense that, you know, 100% of the money that we have left over that we don't put towards trading, we put towards our businesses, right? So, I mean, like, why would we back, you know, Westpac and all the crap that might come out of that as opposed to, you know, ourselves? In that way, we're pretty arrogant.
Well, yeah, but it's...
Well, self-confident, right?
For me, but it's also just about... if someone's asking your opinion and you're a technical analyst, it's only if everything lines up that you really got an opinion. So will I put money on the trade, or why not put money on the trade? Yeah. So anyway, so that so that's support and resistance. Moving averages is probably the most commonly used, you know, indicator for a trend trader. So I'll just bring these three pictures on. I got to do something about this sideways thing. It's a bit weird. But anyway, the bullish, what we're looking for here is the crossover of the shorter term moving average over the longer term. So we can see the red line is the shorter term. You can see on the bearish chart that the red line's crossed over and gone down. And on the bullish charts, crossed over and gone up. That is referred to as a golden cross on the bullish one and a death cross on the bearish one. Sideways, we don't have a name for that, but it's when it gets between those ranges, it often consolidates. So that's just a comment. Now, so how do we use that? Well, when we see that crossover, it's saying, okay, the trend, the overall, this is now an indicator that it supports the fact that this is actually a trend move. It's moving up. And so this is an indicator that's part of our toolkit. It's one of the things that we look at with this particular strategy. We need to see that we always trade with the trend when we trade in this particular type of strategy.
All right. And that, you know, so just really quickly, you know, just a bit of numbers talk for you. You know, the really interesting thing is our stats are showing that if you're, for example, an equities trader, and you buy every time there's a golden cross, and you sell every time there's a death cross and get short, if you can do that, call it with CFDs or whatever, the numbers are not anywhere near as you think they would be. But having said that, because options are much more shorter term, and we're looking at specifically trading with the trend when everything's lining up every single month, we're putting on a new trade ultimately, the balance of power, so to say, shifts completely. So because they're all sort of delayed indicators, what happens is they'll kind of have their move up, and then they'll come back down. And because they're so delayed, they usually don't catch up fast enough.
Mm-hmm.
So I've seen a lot of equity traders use moving averages as a way to predict longer term trends. And overall, sure, if the market's, in a golden cross, you're probably better off buying than selling. But options kind of, it's the dynamics are so different, which is, bizarre. I probably could have explained that a lot better, but
I'll listen to the recording tomorrow.
Yeah, sure you will. You'll get someone else to listen to it and then just feel like, what is that guy talking about?
ADX is the other thing that we look at.
So if anyone didn't get that, please let me know. I'll re-explain it.
Excuse me.
And if you don't want to hear it again, then don't say anything. Pretend like you understood it. So,
Right. So the ADX is a confirmation indicator for us. People use it in different ways, but ultimately it shows us whether whether there is a trend, whether the trend is present or whether it's absent. And that's really all we look for it in this particular strategy. It's one that we use for our Iron Condor strategy in some instances. And when ADX has been incredibly low, actually, well, I'll jump ahead and say...
Sorry, just to correct you, no longer Iron Condor, just in Litz.
Yes, no, but... Sorry, I should say, when we did our analysis on the Iron Condor, which was a 3-month, 4-month project for some poor guy
out
of
your sense of time is...
Well, he only worked for us for 4 months, and he was sitting there pinning little data points every day.
My time in zero.
But what came out of that was 100% of the time when the ADX was below a certain level, the trade worked. But the only issue with that was there was only like 10 trades for the year, right?
Yeah.
So, you had to... there wasn't quite enough data to get too excited about it or enough trades to make too much money on it. But anyway, so what we look for here is there a trend or not? And our rules are actually, if it's above 20, that's enough for us to go, you know what, we'll trade it. All right. So let me pull all of what I've just put together in one moment after Ivan has answered this question. Is there a single best technical indicator that can tell us if traders are
You really were expecting that I wouldn't come into the office today. So, one of the interesting things is obviously, for those of you that are thinking, why on earth did we call our platform implied volatility, and what does it all mean? So implied volatility is sort of the backbone of a lot of our trading systems, our trading strategies, and our edge comes from specifically that because what's the best way of explaining it? It's sort of one of the most misunderstood concepts in trading, full stop. It's sort of a third dimension. And so before I talk about what implied volatility is, I'm going to tell you a bit about the pros and the cons of it. So the the best thing about the implied volatility indicator is that it's a leading indicator. So it actually comes from the market price of options, and you reverse engineer them to go on and give you what traders are expecting statistically to occur over the next period of a year, and then you sort of you break it down into certain expiries. So it's a leading indicator. It's based on the future expectations, and we're going to talk about the accuracy of those in a second. It's based on the real sentiment of professional traders and sophisticated traders that tend to use options. All of you that are on this webcast today, you're thinking about markets in a very different way to what a lot of other people, what the majority of the people are thinking in. Otherwise, you just wouldn't be here, right? So it's based on sophisticated traders that want to go on and get extra returns in their portfolio. We're going to talk about the accuracy in a second. We've turned it into a ranking indicator so we can see how expensive or how cheap implied volatility is compared to itself, which is the only, the options game and the implied volatility platform are the only places in Australia you can get this. It's very reliable over the XJO 200, so you can see the overall market sentiment. However, as I just mentioned before, you're not going to get this in any other trading platform in Australia, and it's not. It's difficult to get. So the top 20 stocks are going to be very, very good because there's a lot of liquidity there. For the majority of the other stocks that have options over it, there's about 75 stocks now. It's decent. It's probably not as accurate as it would be, but the stats are showing that it's all it's all decent. So it comes from options, and obviously the majority of the funds and the biggest volume comes from hedging activity in particular, or covered call type scenarios where they're trying to get a bit of extra income into their portfolio, or trying to buy the stock below a certain price. Again, if you're going through and this is the first interaction with options or thereabouts, and some of these things aren't making sense, you'll be getting, if you came through the game that we've just started, you'll be getting the 10 by 10 course, which is going to go through all of those basics. If you aren't getting that, let us know. We can subscribe. You just type in 10 by 10, and we'll send that to you. So it's just 10 daily 10-minute videos. And we sort of explain some of those basic concepts and how people use it. But so implied volatility, the way you can track it back as a simple way of explaining it, although this wasn't really explained specifically with options in mind, but it can all go back to the Dow theory. And the Dow theory was something that was created by Charles Dow, who created who co-founded the Dow, and he was the chief editor and the founder of Wall Street Journal. And he was writing as a chief editor, he was constantly writing about this concept of us being really fearful at the bottom of the market and being super greedy at the peak of conviction. So, if you sort of think where the market is today, you look at every night, every morning I'll read the CNBC headlines, because that's always a really good way of seeing where the nitty is. I use it for a very different reason to what normal people do it. But, it's like, oh, yeah, we're going back to record highs. Expect the Dow to be 300,000 by the end of next year, and S&P to be whatever our S&P index was going to be at about 10,000 before you know it. And that in many ways starts getting to the point of overly high confidence towards that super high level of conviction. And we saw a bit of a glimpse of this about a year ago when we went from pushing new highs consistently to suddenly a massive market sell-off, and we all quickly got into a period of hope, and everyone who's blaming the markets for continuously going up suddenly put the towel in, started buying them, and then got destroyed on the downside. And so then it's hope turned to disbelief, and then ultimately into surrender. The really cool thing about being an options trader is that you actually can use this implied volatility figure to understand where the head, or what mind space, I guess, is occupying the traders' head. So when volatility is super high, like GFC type level, implied volatility spikes dramatically. People start taking out protection. They think that the world is ending. They frequently don't want to sell their shares, which is why they use options, and vice versa. Volatility becomes super low during periods of complacency. So if you look at, for example, 1-year chart, when we pick this up, of CBA, and every single time implied volatility got to the high levels was also the time that CBA was trading at its lows. And the really interesting thing about that was, the first point was sort of the heightened fear out of the Royal Commission, where people were saying, okay, well, this is it. The banking sector's over. They're all going to get, best case scenario, they're going to get bought out by someone else. Otherwise, all of the banks that are going to be in Australia are going to have American flags on it or Chinese flags on it. Seriously, this is all over. And implied volatility jumps because people start protecting their portfolios, and it always, it frequently tends to be the low of the market. People start getting irrational during very extreme points, pivot points in the market. So we gave this project to our quants. It really was, it wasn't 4 months, it wasn't 6 months, it was actually 9 months in the end, and we really should update the slide. But we specifically wanted to study implied volatility and directionally neutral strategies. And we played around with 55,000 daily samples, to give you an idea of the kind of data that we do have, which no one's ever bothered to save, but we've been saving this since 2015. You get access to this in the backtester, in options backtester, and and you can chart this in the charting platform or the backtester, and you can see sort of the power of what implied volatility means. And so we gave all this data to go on and study, and Patrick and myself have never been extremely amazing at school, but we've been pretty good at practical kind of applications of stuff, which I guess probably made us decent traders in time. But we gave it to quants who are completely kind of mathematically driven, and
They haven't traded in the past, so for them, they're just going at us, going, "Who are these crazy people?" And you have no right to be wearing glasses. and only people who get to get PhDs should be doing this. Anyway, so we did the study over 3 years of data, a bit over 3 years of data, and we found that looking at normal statistical distributions, what we expected is one implied volatility value. If that's saying 20%, for example, we would expect that that shows that over the next year there is a 20% chance. Sorry, we expect that there is a 68% chance that stock is going to go up 20% or down 20%. So we went and said, okay, from today to the next expiry date, as long as that expiry date is longer than 15 days, how does it match up against what the market actually physically did? And we did it every day, completely unbiased to anything that we thought about the market, just purely let's assume that is the market going to go up or down by more than this percent on any given day. And we found that what we expected to be 68% through all of the statistical study was actually 70%. 2 standard deviations with 95%. We expected 95%. We got 95.3, and 3 standard deviations was 99.5% was what you'd expect, and we actually got 99. So what that showed us was that the traders are absolutely pinpoint when predicting the likelihood of the market going up or down. So in terms of the range that we expect over a certain period of time, call it around about that 45-day range, which is where we're trading, that 30 to 60 range, day range, they are absolutely, the market is priced to perfection. So this is where the opportunity ultimately lies, in the fact that there isn't that many people trading options versus equities, and that's where we get the edge. So we use this knowledge, and we use the understanding of implied volatility to take advantage of times when we know we have a statistical edge in the market. So the really basic example is, let's say out of everybody on the phone call today, half the people want to go on and buy CBA and half the people want to sell CBA. Right, for whatever reason. Oh, actually, better yet, let's take Westpac because it was in the news. Right, so let's say half of you are thinking, okay, this is the world ending. Well, actually, let's take it 3 weeks ago when the world wasn't ending. You guys would say, okay, half of you want to buy Westpac, half of you want to sell it. You will generally meet on the same price, right? Because everyone thinks the market is priced to perfection. So buyers meet sellers, everyone's happy. When something like the recent news comes out and there's, sort of investigations and whatever else, suddenly sellers start wanting to sell down, and, you read about CEOs quitting and whatever else, and you go, okay, this is it. Westpac is fundamentally broken. We need to get out of this. So the sellers start taking control. The buyers are no longer happy to buy at these prices, and the market prices become irrational. And just to be clear, I'm not advocating to buy or sell Westpac. I'm just giving you an example. So fear comes in and surrender comes in. So this is generally where people want to go in and transfer money into other assets and whatever else. Now, in our platform, which is really unique to us, we actually show you how expensive this implied volatility value is. We show you how expensive the IV rank is, which is a ranking indicator over the last 52 weeks of these implied volatility values picked hourly. So it's a value from 0 to 100. If IV rank is at 100, then uncertainty, fear, is sitting at the highest level it has been over 52 weeks. If it's sitting at 50%, then it's right there in the middle, and people are starting to take out protection for stocks, and it's starting to get to that fear of the level of fear. And then if it's 0, then implied volatility is at a 52-week low, and it's starting to signal complacency. So generally what happens in bull markets, it gets closer to 0 because people start getting complacent. It gets to 100. It's usually the peak of the bear markets, or at least corrections, and people start sort of panicking about the next move. In our platform, you can go on and sort by this. So every single underlying that has options over it, you can go on and go into IV rank, sort it, and you can see at any given point in time in the day what the IV rank of that particular underlying is. So, for example, Lendlease right now is 62, which means that it's starting to get into that area of fear, or I guess uncertainty, typically, and that's how you can start, I guess, putting in the statistical side to trading. So when our quants were looking at this, some of the interesting things that we found is that, so when IV rank is high, so when that uncertainty is getting to its highest point over all of the data that we had, there's lower dispersion. And there is more predictability about what the market is doing, and there's less fat tail risk. So when other people are effectively sitting there and they're dumping their stock positions and driving volatility up, we become sellers, or we don't become sellers or buyers of the stock, we become sellers of the uncertainty itself. Right? So we're trading a different dimension. Hopefully that makes sense. But that's all really awesome. Ultimately, then, that sits as part of a trading system, and it's one of the key weightings that we give in our trading system. It's not the only thing we look at. Yep. But now you can tell us all about trading systems.
Interesting, and also one of the things that
I think that's the best time. That's the best way I've ever delivered that.
Yeah,
I'm just gonna give myself a compliment because
I wasn't actually listening, but I'll take your word.
Everyone's just confused. Going, what is this?
Yeah, but interestingly, when the strategy I'm about to show you, we use that implied volatility to actually work out how we construct the strategy and what legs we choose in the strategy, more so than a directional indicator in this one instance.
Which is that. All we're doing is we're just giving ourselves an extra edge in the market when we can. So,
right. Anyway. So I'm going to run through in just one moment how we trade breakouts. Right. So breakout trading is a specific strategy that we use, and it works on the basis that we expect big moves to occur, right? And we've got for this particular strategy, we've got a trading system that considers, and I'll talk about what it considers in a moment, but I guess the analogy is it's like starting a business without a business plan is like trading without a trading system. And
I like how you tried to talk around that slide and you just went, you know what?
So I'll just bring up the next slide. So trading. I guess one way to think about it: if you decided, look, I make really good bread, I'm going to open up a bakery, or I sew good clothes, or I've got a good eye for fashion, or whatever it might be. I'm going to open up and I'm going to open a business in that area because I'm passionate about that, and I'm going to focus on making bread or choosing good clothes or whatever it might be. And if you don't think about where your shop is, if you don't think about stock control, if you don't think about the customer experience when they walk in the door, all of these different factors, then they're going to have a massive impact on how successful you are in running your business. Right now, ultimately, what makes you really successful, above and beyond everyone else that's just sort of partially successful, might be you're very good at one of those things. But in a trading plan, you've got to consider all of those things. And I guess if you think about your own trading, have you got a trading system in place? Do you trade mechanically? Are you in a position where you can manage your emotions? Have you considered all of the different factors that need to be considered to allow you to trade successfully? And quite often, there's a focus that is leaning too much on one thing and not considering others. Now, technology...
This thing mostly people think is the most boring part of the conversation.
Yeah.
But in reality, if you want to go and do something seriously, you have to do it. You have to have a trading system.
Yep.
If you have a business plan, it's just...
Absolutely. You've got to plan, you got to plan how you're going to plan. You've got to plan how you're going to approach putting a trading system together. And then you've got to have one, right?
So I think the key thing is I'm going to do this because, I'm going to put on my tech, and you're just going to be like, keep talking, and this webcast is going to go for 5 hours. But, the thing is, I think part of, I guess, where we're thinking about this so differently is just embracing how much truly technology has moved on.
Yeah.
If you think about the stuff that has been sending us into space missions, Cray 2 was one of the first, it was actually the first supercomputer in the world, built in 1985. It's like $30 million in today's money. Although that's 2017, so, based on that currency right now, it's probably about 100. But weighs 2.5 tons, sits in a museum, right? by comparison, you just upgraded to the new iPhone, so I don't even want to know what
That's
the comparison
an old,
is.
shitty iPhone.
This is the old shitty, XS 10 that I know my wife's got like cracked back kind of thing, but it's 6 times more powerful. And so if you compare that to what sent us onto the moon, you can actually you can literally land with all of the computing power, 240 million Apollo 11 rockets there. I mean, that probably goes to show, Paul Neil Armstrong and the kind of technology that was backing. Go into space, man, you'll be fine. We've got like a thing made of metal. But technology is truly unbelievable, expanding. But if you just think about it from a pure numerical point of view, from 1956 to 2015, there's been a trillion-fold increase. That's not like plus 1 trillion. That's multiplied by 1 trillion. So in our pockets, we now have access to this unbelievable technology. The stuff we can do with tech today, for options specifically, this is why options is now one of the most, this is why this university that we're partnering with, one of the big four, is so super keen on doing something in this, is because there's now a whole stream of research into options specifically because of the possibility that you can now achieve with technology. We could not do what we've been doing a year ago in terms of all the trading systems that we now do, and 3 years ago we wouldn't even be able to build the trading platform. Or the data. Yeah. So I mean, it's massive amounts of data, and powering through that is difficult.
Yeah, and so you want to make sure that if you're trading, you can use that information, you can use that technology to your advantage. So simply by having the technology there is one aspect of it, but then we've got to put it to work to be able to provide you information that you can use to give you an edge when you're trading. And using that information is very important. When we, I think it would have been like 2.5 years ago, 3 years ago now, when Ivan and I were, well, this wasn't definitely by no means the first time we had a conversation about it, but we were sort of getting into a later conversation about how would you do this. And we were talking about some trading systems, and a lot of it was just over a glass of red wine, observations about, and some hypotheses that
I reckon this is going to work.
I reckon this is going to work. And what we've done is we built one, first of all, we then went through a process to build the backtesting tools that we now have available to you to be able to use yourself. But we tested that hypothesis, and so it actually came up really positively. And so then we defined the rules around that trading system, and then since then we've been working to optimize those rules. And so there's been a few things that we were doing that we actually realized we didn't actually need to do. Yeah. And they were actually just, it was just information. We were tricking ourselves into thinking that we were getting an edge, but we were getting the edge elsewhere. So overall, the trading system was working. So really what we've done in the analysis is simplify it. Right?
There's less hundreds of trades I used to do every day. I thought I had something, and then the corns just, they ripped out my soul and they stepped on it.
Yeah. So ideally, when putting a trading system together, you can have different systems specifically for trading what you see in certain times, or you can have an overall system. But if you are going to trade the market, being able to profit in a range of market conditions is important. I'm not saying there are times where, sometimes the best thing to do is just actually not trade at all, because the market is giving you no leads, or there's not enough it's abnormal, so therefore you don't have systems set up for abnormal markets. So sometimes it's do nothing. But generally speaking, the market goes up, it goes down, it goes sideways. Over time it's gone up more than it's gone down. Over shorter periods of time, you'll be surprised statistically the difference between up and down isn't that great, right? And so that you want to be in a position where
just touch over 51% of all trading days are up days.
Yep.
And then you take it out to a week, it's 55%.
Yeah. Yeah.
It's just.
Yeah,
this is the thing that you were saying back in that course, was that the difference between rich and ultra wealthy is 1%. Right?
Yeah. So it's surprising. So when you're trading, if the old saying I've got is that if the only tool you've got is a hammer, everything looks like a nail, starts to look like a nail. If everything's about making money when the market's going up, you'll be looking for up trades. Guess what you're going to eventually find? Bullish trades. Doesn't matter if the market's bearish or sideways. So being impartial about that, knowing that your trades are quant architect, that you've mathematically proved your hypotheses, and something simple to use, right? It's not complex. So let's go through and give you an example of our simplest system. Now, if you want to get access to our trade ideas, or you'd like to have access to the trading platform, or you'd like to have access to the education, just type in yes, right? So as we go, anything that you would like to get access, type in yes. Tim will get in contact and organise and give you exactly what you're after, right? So this is a breakout trade. So if you wanted to get access to the breakout trade ideas that we have and the scans that we do, just type in yes and we'll get you set up to get access to all of that. Now, so you can see a list of questions here. There are 5. This is us doing technical analysis on this particular strategy, right? Is the share price above major resistance, right? So on this particular day, what's major resistance for us? A 52-week high, right? So when people draw support and resistance levels and you look at a chart, there's lines everywhere. When we're trading breakouts, we don't care about any of that stuff. Is it above a 52-week high, or on the downside, is it below a 52-week low? And if it ain't, we're not even looking at it, right? So in this instance here, on this particular day, it broke that level. Right, so it was above a 52-week high. Is the 50-day moving average above the 200-day moving average? Golden cross? Yes, it is. Is the 50-day moving average trending up? Yes, it is. Is the ADX above 20? And you can't see whether it is or isn't. You're just going to have to trust me on this one. Right?
We decided
and if that's the case, then we would do a strategy that's called a lit long. Now, basically, for those of you that are traders, a lit long's an at-the-money bull put spread, and it's a strategy that benefits if the share price goes up, and time decay, if the share price goes up, works in our favour. But when we get into this trade, our analysis has shown us that statistically, when we follow these rules, and it goes and it breaks those levels, it's more likely to go up, right? So statistically, 70%, something like that, they'll go up, right? You'll make money on a bull move. But when it goes down, it really goes down, right? So if we're trading a fake out or a breakout, in essence, what we're trading is a pivot point. And so we're trading at a serious pivot point in the market where it's either going to be successful and continue up and stay with the trend and go for a decent move up, or it's going to fail. And if it fails, how do we know if it fails? Well, it's because it breaks the 50-day moving average, right? So we've got a set of 5 rules to get us in, and we've got 1 rule to repair, right? And there's a couple of other rules in the system and so forth. But basically what we do is our indicators scan the market for this, and if it breaks out, it'll identify the trade. And then we've got, we'll watch and be looking for repairs, right? And you know what? When it breaks this level, the best trade you ever have, and we can see this is probably a good example of it, is that when that moves down, we repair the trade and we go into a bearish position. That's when you're most likely to get a move like that. And the biggest trades we've ever had, the biggest profits we've had, have been on the fake out, not the breakout. So we don't care. All we care about is the thing that we're most confident about when we enter into a breakout trade is that there's going to be a big move. The second thing we're most confident about is that we can pick the direction, right, in the first instance, right? So anyway, so that's trading a breakout, and anyway, there you go. That's all right. So now we've said that, I might just skip out of the. So, if anyone would like to get access to the breakout trade ideas, what you need to do is type in yes, and we'll get you set up. For all those people that have typed in yes, we'll get you set up to be able to trial that or have a look at it. All right. Now let me move to, and I am using the slowest computer in my office right now. Ivan gives me a hard time about every time we're on a webcast. So just to show you, when you log into our system, you invariably will end up on this page, which is where we do most of our analysis from. And as an options trader, if you're thinking about wanting to do a trade, and if anyone's got a trade they want to suggest, happy to price something up for you now. But if I go into trading scans, these are the scans for breakout trades, right? So good thing about this is that today it's telling us there's no trades, nothing's met the scanning rules. So guess what you've got nothing to do, right? So there are no trades that are lined up. All the lit shorts and lit longs, there's nothing there, right? So I can close out of our scans.
Well, it is after hours, so you're not going to get much. But
yeah. But there's nothing that's lining up. But if there was, and I go to my options cookbook, all right, and then I would go, if I wanted to do any options trade at all, I've got a cookbook, and the recipes are the option strategies. And I can scan through and have a look at whatever option strategy I want. So if I want to go, and I can sort by price, so I can say I would like bullish trades, and it will give me a list of all the bullish strategies. And there are more strategies than this, but a list of the main options bullish strategies you can do. Now, if I saw a lit long trade, I just type in lit, and I'll go lit long, and I can choose. I've got this on AWC for no other reason than that's what was defaulted. That's the stock that we were looking at last. And then I would choose expiry day. And actually, we're in a weird spot at the moment from an expiry day.
It's right in the middle.
Which is probably why trades aren't presenting themselves as well. We're right in the middle.
The market conditions have been weird.
Yeah. So there's nothing there, but I'll go for 23 days just for the purpose of showing you how easy it is to put the trade together. And so what's happened now is it's pre-populated that particular option strategy for me. So if I wanted to do, say, I'll do 300 contracts because this is tiny and AWC is not something I've ever traded. But in this instance here, if I did this lit long strategy, it's saying my max profit 1650, my max loss is 1350. All right, and I can do more risk or less risk, and it will show me that okay, if the share price, what's going to happen if the share price goes up or down, and what is the impact of time decay on this particular strategy, right? And I can see at what point does time decay just start working for me.
I like how you pick the stock with like a little underlying, so it's always so crooked with all the with all the rounding and stuff. But yeah,
it wasn't a great choice.
No,
but anyway, what it really wanted to demonstrate is now I'm not sure who I'm logged in as, but if I wanted to do the trade, it's as simple as clicking through a process to place the order, right? And then I can put that. I'm not going to put an order on AWC. Tim will kill me when he comes in the morning.
It's not his.
All right. Yeah. Anyway, right. Thank you for clarifying.
No, so I can see the M on the top.
So there is. Anyway, so our technology is built to. So if trading with us, you can use this tech. You can use the trade ideas. There is a big educational library. So if you'd like to get access to the education, the other thing to do is type in yes, and we'll organise to give you access to all of the education. If you would like to really just...
It's free.
Yeah.
It's free. You don't have to do anything.
We do have quite a few people who, they actually don't want to they don't want to do their own analysis. They're happy for an advisor to call them up and say, hey, guess what? Today the scans have presented this, and then discuss that with an advisor, and then the advisor give them, help them put the trade on and help them manage the trade and do that. So you might be someone that wants to trade, but it's something that you want to do and you want to be led by an advisor, or equally you could be someone that wants to put the trade on, and then if you go, oh, I'm not sure about this, I want to pick up the phone and speak to an advisor, you want to be able to do that.
The other thing as well is that a lot of the bigger guys, sort of big heavy traders, one interesting thing that they were saying to us over all this time is that they'd rather do that and not feel the solitude of trading by yourself.
Yep.
And the funny thing is I was always the complete opposite. Actually, I don't like talking to people, and I'm worried about them talking out of my trade or whatever, Yep. Well, this is sort of pre-trading systems, but for a lot of people, that's a big thing. They just want to call up someone and say, my trade is doing X, whether it be up or down. What do I do? Like, what would you do? And
Absolutely.
they're not going to go in and say, either trade or go away, because these guys are traders.
Yeah, and the other thing is it's really important to us is that the advisors, they will advise, right? If you ask them a question, they will advise, but they understand that if you're a trader, their job is to help you execute your trading plan. So they might need to give you information or they might need to help you fill a position, but they are not to start giving you their opinion about whether you're right or wrong because they don't understand, right? A market is made up of many, many opinions and that we have to be very careful about that. So if you're an experienced trader, and a lot of our clients are very experienced and big traders, they don't want to talk to someone and hear their opinion. They want to execute their strategy. They might need advice on how to construct the strategy, or they just simply might need someone that can help them fill. And even though advisors, they charge more than you trade online, and significantly more, they can also help, depending on the size of the trade you're doing, help you get better fills. Yeah. So they have different roles to play. So if you want to speak to an advisor or you would like more information about that, type in advice or something like that, and then we can get one of the advisors to give you a call and talk you through whatever you need to talk through. So, right, guys, in terms of what we wanted to cover tonight, I think we've covered everything.
Lots of stuff on tomorrow.
Has anyone got any questions? Actually, the other thing is, if you would like to come to the trade group session tomorrow, we're happy to let you into that session. Just type in yes again.
I think there's a lot of yeses now.
Yeah,
but
there are a lot of
maybe,
yeses.
maybe just webcast. Yeah.
That's
Now we're okay.
Right.
You're all getting trials.
Right. So anyway, so for us, we look, again, we've been sort of talking about and selling our virtues all night, but without question, if you're an options trader, it's the best trading technology available, hands down. It's the cheapest way to trade options in Australia, significantly. It's the only way that you can do spread trades. We've built back testing. If you're a trader or you're someone that wants to learn to trade, what we do is when you take a trial of our platform, we put 50,000 fictitious dollars in your account. We allow you to do lots of different trading strategies. And so, you can get in there and you can practice trade and play around in the market. So if you want a trial of that tech or trading platform, live dynamic data, charting, all of those different things, type in yes if you haven't already, and we'll set you up for that. You can, obviously, the back testing your own strategies, having access to all of that technology, really important. You can scan the market for trades. We've built all these trading systems as well, and we've got all the best tech built behind it, including our charting and the like. So if you haven't already typed in yes, please do so. And if you've got any questions for us, I know we're getting...
You've got 2 minutes to ask them and for us to answer them. So
it's 8 o'clock.
Yeah.
Happy to take a couple of questions.
Also platform webcast tomorrow, which Tim is running. We've got our trade group, obviously, that some of you guys...
Yes. So if you're keen on this and you want to get a little training session on how to use the platform, at 10 a.m. No, 10 a.m. tomorrow morning. It's only for people that are members.
Yep.
But anyone on the session tonight that would like to get access to that, type in platform, and we'll make sure that Tim gets you set up first thing in the morning for that session and emails you. Okay, Sven has asked what is the best broker for trading.
Okay, come on.
All right, so
the best broker for trading in Australia. Sven, clearly we have not answered this question for you. Now, right, for anyone who wants to stay for the next hour, let's start the session again.
But Sven, so in all seriousness, if you're going to trade, it really comes down to what you want to do as to who's going to be the best broker. Trading options and you want to trade them online, we believe that we've got the best service available. If you're trading and you want to have a phone advisor, there are different companies that have got good options advisors that you can access. The 5 best ones we've been able to convince to work for us. Outside of that, you'll have to go and find them. The challenge with finding good options people is that advisors won't necessarily they'll be doing lots of different things and then they'll do a bit of options. Our take on it is different. You've got to be specialised in this area. So the guys that work for us all they do is options pretty much. All right. Okay. Fat Tail.
So what countries are using American options and European options? The funny answer to that is it's actually completely unrelated to that. It's just the exercise style. American options means that you can effectively exercise them any time before the expiry date. European options, you have to wait till expiry date. In reality, they work very similar. In Australia, we do both Americans and Europeans. The general piece there is that, you're better off selling Europeans, generally speaking, but they're a bit hard to get filled on. Again, 10 by 10, if you're part of the options game, you'll be getting that. Otherwise, let us know. We'll send that to you. There's a whole video on it. There's also a whole video on the education portal on that, which talks about slightly different things. Marion Fat Tail, probably longer story than this. Nassim Taleb, Black Swan. There's a book to read, and they'll tell you all. He absolutely nails what Fat Tail means, but it's effectively the unexpected event occurring. So if you feel like reading a book by a Nobel Peace literate,
it is a great book, and it's a great book just for life.
Yeah,
right?
it is,
There is lots of Black Swan.
Yeah, by Nassim, Nassim, Taleb, Taleb.
Yep.
Fantastic. It's actually light reading.
So, Black Swan was
found in Australia.
It was found in Australia.
Yeah.
So before that,
they never thought there was a black swan.
There was no such thing as a black swan. There was only white swans, and they came to Australia. There were black swans there. So it was a completely
Anti-Fragile is also awesome. Now, Mark, do you guys ever take anything other than technical indicators to account?
No.
Example, Ivan said he watches CNBC was actually, and just reading the headlines, by the way, but for some ideas about how the market feels. To be honest, it was just more like a contrarian indicator, so I can talk about it on Wednesday sessions pretty much.
Yeah.
The reality is that in the past it used to be very different when we used to be so focused on, in my case at least, when I used to get into the office at 8:30, the latest, and then I'd be classified late, and then 9:50 you're constantly looking at the screen all the way up until about 4:15 when the market closes and futures close at 4:30, and you don't have a lunch break, like you bring food with you. And at that point in time, that stuff was important. Now it's 100% trading systems. It's all about not trading when the opportunity doesn't present itself. I don't really care that much. I've lost so much money doing stuff that was outside of trading systems that I've sort of learned my lesson to go and just say, okay, I know I've got a quantitative advantage doing this. I'm going to do this. So that's probably that. Author again, sorry, Nassim, Nassim, Taleb, Taleb. Really prominent author and financial services critic of some sort. Fantastic book.
Let me type it in.
Yeah. It's funny. It's actually the first. We're going to keep getting asked this question, going, what is what are some books that you should read? And they'll always expect kind of options related books. And this is literally the first time I think I've ever recommended a book. Maybe because I'm, illiterate.
You're not a big reader, are you?
I'm not, no.
All right. Now, and I'm not, and I'm dyslexic, which is not a joke.
Nicholas is, But you read a lot.
I do read a lot.
Yeah. So,
The Black Swan. There you go. There's the details. Should have come up in your chat box. Whoever wrote that is coming through with the name of one of our staff. So I don't know if you. Anyway, maybe if you put into chat box your name, it's come through as an internal name. So whoever asked the author again, please put that in so we'll get someone to send you some more details about that. All right, guys. Well, any other questions? Anything? The big one, trading books. One of the.
We should actually we put together a library. Yeah.
We'll put it in the education.
Get all the referral codes. All that stuff. No, kidding.
Mark, do you ever take anything into account other than technical indicators? Look, it just comes down, there is no one way of trading, and it's just that we use technical information and we only observe certain things. So for those trading ideas, anything outside of that is kind of unhelpful information, right?
Yeah.
And so therefore we kind of ignore it. But if you understand, for a decade or more than a decade, for probably 15 years, I had a funds management team and I had a trading team. And we would meet every morning. We would have a conversation about the market. And I didn't do this forever, but I stopped doing that because it was completely unhelpful to have funds managers looking at different time frame, having an opinion about the market, clashing with a trader who's having a strong opinion that it's just broken up. We're going for a run and we can make really good money on this. And they're going, yeah, but fundamentally it looks sick and da 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 da. But you know what? By the time they're right,
it doesn't matter.
We've lost all our money for a directional trader. And so we kind of, group think is a very good point. I'm reading a really good book on which is talking about group think at the moment. Good to great, Mark. It's a good read. But those kind of group thinks in trading it. Yes, you read it as well. So those kinds of things from a trader's perspective, you really just introducing other stuff is just kind of unhelpful, and keeping it simple and clear and in concise is really, really important. Okay.
One last question, which is better, index options or share options? Do you want to answer that one? No, I don't know.
Well, I tell you, I traded XJO.
From a liquidity point of view, index options are awesome.
Yep.
But
there's only the one, right? Yeah. So I traded XJO like pretty much anything I traded for 2 years. And I was busy at the time and I wasn't looking for lots of trades. But,
the cool thing about index options is that they're all cash settled, right? So you don't have the chance of ending up with stock that you're going to deal with in the morning, so your life, I guess, is less...
Liquidity is the main.
Liquidity, yeah. But in terms of finding a lot less trades and much more suited to a trading system, this is one of those things I remember when we first sort of started talking to clients, when we first started doing this, I was sort of saying, well, you should just go and do index options because they're easier and, and because it's 200 stocks, it's all diversified and it's all, it's trends are a lot easier. Are hedge funds buying or are they selling pretty much, right? And so, I don't know. Then, a lot of people are like, oh, well, what about share options? And you go, well, actually, hang on a second. It's true, depending on how you look at this. If you just literally, you're a macro guy and all you care about is, trying to predict what the next week's announcement from RBA is going to be on what their firm is going to do, well, maybe index options are better for you. But if you actually don't care about any of that and all you care about is trading with a trend, then you've got to give yourself as many options as possible, because FMG might provide a much better way to make money. Then
I think that's a really good answer.
Yeah.
So
and in terms of
there are pros and cons, but on balance, if you're someone that just wants to trade a view, you're better off trading both.
Yeah. Exactly.
All right. Any other questions? Anything we can help with? By all means, send any suggestions through for all those people that have requested having a look at different things. Give us feedback. Tell us if we can improve anything, and please come back and come. You're welcome to come to any of the other sessions we run. All right, guys. Thank you and have a wonderful night. Ivan, did you want to say something?
We've got an iron condor. We had a whole period of no time and ALU came up.
Anyway, we've got an iron condor trade
tomorrow, yeah.
Right.
So that's been quiet.
An iron condor trade for a long time.
Yeah. Anyway,
flight volatility has been too low. Anyway, thank you guys. Have a wonderful night.
And we'll be talking about this trade tomorrow and tomorrow's trade webcast.
Yeah. Cheers. Good night. Bye.